What is buyback? In this strategy, the company buys back its own shares from the public, that is the shareholders. Say there are 1 crore shares of the company with the public and the market price is 1000 rupees. And the company has decided to buy back 2 lakh shares at a price of 1050 rupees. Usually the buyback price will be more than the market price of the company. Then in this case, all those shareholders who are willing to sell their shares to the company can apply to the company for the buyback offer. So here, instead of selling the shares in the stock market to a third party, you will be selling the shares to the company itself and then make a profit. Here also, if the company is buying back 2 lakh shares from the public, it might receive applications for more than 2 lakh shares. If suppose the company receives 3 lakh applications for buyback, then again in this situation, the company will do a pro rata adjustment and pick lots and buy back only 2 lakh shares, and not every person who applied to the company for the buyback will be able to sell the shares to the company. Now, let us understand why is the buyback done. So, buyback is done to show the confidence of the promoters in the business of the company and to show the confidence about their own company. Generally, after a buyback announcement, the price will increase because buyback is a show of strength by the promoters about their own company, and to prevent the share price from falling, this show of strength is done by the promoters. Also, another reason is that when you do a buyback, the earnings per share in the P&L account increases because for the same net profit now, you will have lesser number of shares. Also, it is another form of rewarding to the shareholders, like how we have dividend and bonus. In the case of buyback, if the company has excess cash, then it will reward to the shareholders in the form of buyback of shares. So I hope now you understood what is meant by buyback of shares and why the buyback is done. Thank you.